What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, and I do not offer an investment trading program. And I'm not connected to anyone that offers an investment trading program. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a Webull brokerage account. Put at least 1 penny in that brokerage account. They're going to give you up to 12 free stocks. If you're interested in that offer, guys, there's a link down in the description box of the video. Go click on that Webull link, open up your new brokerage account today, go get that free stock, go get that free money. 2 Fed regional presidents on Monday said that inflation has not faded, and that the Federal Reserve will not decrease short-term interest rates until that happens. I'm just confused though. We get so much flip-flop from the Fed as it relates to what they're going to be doing going forward with short-term interest rates. Now, just to give you guys an update on what the Fed has done in 2022 as it relates to increasing short-term interest rates. Back in January, the Fed funds rate was 0. Fast forward to November, the Fed funds rate is roughly 4%. So in the last 11 months, the Fed has increased short-term interest rates, aka the Fed funds rate, by 4%. Why have they done that? They have done that to fight increasing prices of our goods and services, aka inflation. Now, when the Fed increases short-term interest rates, it does temper 3 things. It slows down spending, it slows down borrowing or people's ability to borrow money, and it also slows down hiring. See, here's the deal. When people can borrow money easily, when people can make money easily through wage increases because of a strong labor market, what do as a country? We spend money, and the Federal Reserve knows that. And the only way to stop us from spending and to bring inflation down, the Fed has to increase short-term interest rates to do that. But increasing short-term interest rates also hurts one major piece of our financial pie, and that is our economy. Anytime the Fed increases short-term interest rates, it also slows down the growth in our economy. Here's what I believe will happen in 2023. I think the Fed will increase short-term interest rates at least by 100 basis points. So in today's environment, we're at about 4%. I think in 2023, you're looking at another 1% increase, which will get the Fed funds rate to around 5%, right? And that will be enough, in my opinion, to get inflation down from 7.7% to around 3.5% to 4% by the end of 2023. 2023 will be bumpy, as I've been telling you guys all along, but it's still a really great opportunity for us to continue investing in paper assets. I'm not your financial advisor. I can only give you guys what has worked for me over the last 22 years, which is consistently investing in paper assets through dollar cost average, right? That's what I've done to help build my wealth, and that's what I will continue to do through 2023, because I believe in 2024, towards the end of 2024, we will see inflation get down to a point where the Fed is going to rapidly reduce short-term interest rates. When they do, that will trigger a new bull market. And that's where all of these assets we've been buying in 2022 and 2023 will start going up in value. And that's where we will create our wealth, guys. So in my opinion, the noise out there is just noise. None of us know what's going to happen with inflation until the CPI numbers come out and give us some indication of what inflation is doing. The next time we'll get that particular report is going to be in December of this year. It's going to be the November CPI report. And all CPI report does is it just measures the increase in the prices of our goods and services that we buy on a daily basis, which is inflation, right? It tells us how high inflation is going, or how high those prices of those goods and services are year over year and month to month. So when that report comes out, we'll have a better indication of what inflation is starting to trend like. We already know in October CPI report, inflation is trending downward, right? It trending downward. So if we can get a second month in a row of inflation trending downward, I think that will trigger the Federal Reserve to soften on interest rate hikes. I think in December, we will still get an interest rate hike of probably 50 basis points. But also in 2023, like I mentioned earlier, I think we'll get another 1%, maybe 0.75%, but definitely we're going to get another couple of rate hikes in 2023. Now, if inflation shows good, steady progress of coming down, then that's all we'll get. And then at some point towards the end of 2023, going into 2024, we'll start seeing the Fed decrease the short-term interest rate, which does what? Stimulates the economy, right? And does what? People start borrowing again, people start spending again, and then all of a sudden we see a sharp run up in our stock market, which is basically a bull market. Because every bear market is followed by what? A bull market. I think the Fed is doing the best they can to curb inflation. And if that means continuing to raise interest rates, that's what they're going to do. Once they believe inflation is coming down consistently, they will pause hiking interest rates, and then they will ultimately start decreasing the short-term interest rate. Drop me some comments and let me know what you guys think about the Fed being flip-floppish when it comes to increasing short-term interest rates, decreasing short-term interest rates. You know, I think they are flip-flopping a little bit because different Fed members say different things on different days and you really don't know what to believe. If you want those 12 free stocks from Webull, click on that link down in the description box, open up that new Webull account today, go get that free stock, go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.